allocation, expected return models, and short global macro hedge fund strategies. He was also named fund manager with a 140 billion industry pension fund in the Netherlands. He's a computer science engineer and an MBA from Rotterdam School of Management and Duke University, Fuqua School of Business. He's also a chartered alternative investment analyst and an NISM certified. I'm really happy to welcome Abhishek to this Twitter space. Hi, Abhishek.
Abhishek, you're on mute. You're on mute again.
Yeah, I'm off mute now, so I'm just waiting for your cue to start, and yeah, I guess we can start once you're ready.
Could you tell us a little bit about how you got involved with investing and a little bit more about your own journey so far?
Shall we start, Krishna?
Yeah, are you able to hear me? Sahir, can you hear me?
Yeah, I can hear you loud and clear, man.
All right. So, welcome to everyone who joined. Just I wanted to give a brief introduction about myself and generally when and where did I start investing, uh, and talk about the philosophy of investing. I mean, I know it sounds a bit esoteric, but at the core of every investment fund and investment house, and especially investor, philosophy plays a very important role because the markets are noisy and there's a lot of news and information. It's where you go back to your philosophy and then you rework your strategy, and then that strategy is applied in the market. So, in that context, philosophy is important and useful. So, as a brief intro about myself, I've worked as a portfolio manager for a sovereign fund based in Netherlands, where we manage pension assets of pooled asset pools. Uh, Personally, me with my co-portfolio manager, we oversaw equity and high bond investments in international markets like Europe, US, and emerging markets. Then subsequently, I moved to India, and I worked for a hedge fund group called Alpha Parity within Franklin Templeton in the systematic strategies group, which was a quant group that was located where people were located in Frankfurt, London, New York, Hyderabad, and Hyderabad was just me. So yeah, I think I have spent many years looking at investment opportunities in market, and I find this the most fascinating, uh, you know, problem perhaps can. So I started Lotus Dew. I'm the CEO and co-founder of Lotus Dew. Lotus Dew is co-founded by Dr. Prachi Deskar. She teaches corporate finance in Indian School of Business. She has spent many years researching behavioral finance and use of that behavioral finance in investing. Um, and on the board we have Klaus Nielsen, who was the head of markets for Saxo Bank. It's an investment bank based in Denmark. And recently we added Rakesh, who was the CFO of Wells Fargo India operations. And from the very beginning, we have been mentored by uh, Mr. Samir Shah, who was the CEO of National Commodities and Derivatives Exchange of India. So, as you can see, at the core, we have people who have different kinds of experience, right from commodities to corporate finance and quant, which we try to put together in the strategies that we make. I personally was interested in investing for a very long time. I remember when I was an 8-year-old little child, I used to plot. We used to get these prices in newspapers, and I used to plot them on graph paper. Right, you could buy graph paper and plot things, and I enjoyed doing that. And of course, when you plot and you automatically try to find patterns on those prices, and I would try to find those patterns. And I remember being a 10-year-old child asking my parents or my dad specifically to let me select stocks for him. So of course that was as a parent you always look at your child and you think that's not this kind of stuff that a child can do. But essentially I'm just trying to explain my interest started very early on in life, and over a period of time I was extremely interested in use of computer science and use of computers in general. So essentially I realized that there is a place where data of finance, market data, and computer science meet, and that's called quantitative investing. So that I found to be an extremely powerful way of uh, explaining and expressing strategies, and that's kind of what we do at the what we do at Lotus. Difference, of course, is that we don't we don't really use balance sheet indicators when we are working with uh, when you're working with data within Lotus. And I'll come to this point further, but I'm here to talk about a few other things. For example, you know, being a computer science engineer, I thought it's important to get a uh, formal education in finance. I MBA from Duke University. I started in Rotterdam School of Management in Netherlands, and then did an exchange at Duke for half the terms. So yeah, I mean, I started being a continent, and then during that time, I I got introduced to economics and macroeconomics. But it's only when I started working for the sovereign fund, and after working there for few years, right? It takes a couple of years before you can connect the dots in your head. So I realized that what we call as macroeconomics, while economists view it differently, it's a very very important factor in or when you're operating in markets. And today I'm going to talk about this link, right? So why does it matter, and how does it matter? How does the actions of RBI matter in the small cap stocks that you hold, right? Exactly what's the link, and how do you interpret the news that you see or the movements that you see in other countries and predict and preempt those moves in your personal portfolio as a way to build your knowledge, how you must react to these information, and kind of make the mm, make the best out of the information that you will get, which is part of the disclosures that governments kind of need to make. So yeah, I think with that I'll pause a bit for Krishna and others to chime in.
So thanks Abhishek for that extremely detailed introduction. Uh, so you mentioned you've got two MBAs. Amongst your other certifications and degrees, what was your thought process behind getting two MBAs? And why not another different degree? And what benefits uh, do you reckon these two MBAs added to your investment philosophy?
So it's not two MBAs. I went and started MBA at Rotterdam School of Management, and I took an exchange and I finished it in Duke University. So it's one MBA degree, but it's split across two different schools. So yeah, I think the more important question is, as an engineer, why did I do my MBA and how does that work out, right? And I think to that, I would just say that as an engineer, computer science engineer, when I was working on software, it always felt like the software belonged to the business and business is supporting the cost of the software. But when you do an MBA, you are part of the business decision making. So one of the things that really changed while I was doing the MBA is that you had plethora of access to senior management of different companies. So you started to see them as less mythical characters who are running the company as more rather more human beings who are similar to you. So the fear of approaching senior people in any organization just went away. I think that's the key takeaway.
Thanks. Krishna, do you want to go next? Krishna might be unavailable right now, so I'll ask the next question on his behalf, uh, which would be like, how important do you think understanding macroeconomics is for the average Indian investor, and how does an average Indian investor go about it? Uh, what metrics can they start looking at?
Right. So it's a important question, right? So I think many people in the audience would have heard about government bonds, right? Government bonds or government treasuries. Have you ever heard of government equity? So there is no government equity, right? So where does the equity of the government go? So the equity of the government is actually, can be thought of as a currency. So when and the value or the change in that currency basically reflects the ability or the balance sheet of the government as such. There is no balance sheet of government, but just think about it, right? So what happens then is that uh, corporates who are working within the regime of a government, they get priced in two ways, right? First is that whatever is the sovereign bond rating, the rating of a corporate can never exceed the sovereign bond. So even if you have the healthiest balance sheet in the world, but you're operating in a country which has not so healthy balance sheet, your rating cannot exceed the sovereign rating. Two, because there is no government equity and the residual is kind of somehow baked into the currency, uh, the way the government manages inflation really affects the currency and hence affects your pricing. So I think in general, government and macroeconomic is very important, and especially in the case of India. So few details, right? So India is traditionally a current account deficit country, which means that it imports more than it exports, which means that there's always a demand to sell Indian rupees and buy dollars to meet the extra import, right? So if you're selling rupees and you're buying dollars, automatically whatever you're selling more and buying, less means that the price should decrease, and that's good for India because India is a net, the listed part of India, right? So the listed markets of India. If you split the revenue between domestic and international, and you take all the listed companies, you'll see that exporters dominate the revenue stream. So, which means that in the context of India, if rupee is getting weaker, it benefits exporters because they can get more dollars, and while they pay the same rupees, uh, so they can get more rupees when they convert dollars on a weaker currency, and they can pay the same rupees to the Indian local labor. So that way, India having a depreciating currency is beneficial to the market and is beneficial to exporters in general. And because in India, uh, most of the listed companies have net export dominated revenue, that remains an important criteria. Now, is that really good for the country in general? So what's the impact of that? As you know, governments in India are politically motivated. Of course, they manage our economy, but when inflation happens, which means that average prices of things go up, uh, that is where most of the marginal income goes. So people who earn less, they get most affected by inflation because they are the ones who consume most of their, they spend most of their income on staples, which could be food, grains, or travel, energy, fuel, diesel, petrol. Core inflation, which excludes energy, is what we see as inflation number. But everybody knows that things like medical inflation, education inflation, they are much higher than the reported numbers, fuel inflation. So uh, while a high inflation country benefits exporters because they can on the weaker rupee. So for example, you invoice $100 when it was 65 rupees to a dollar. It takes 3 months for them to get the dollars paid by the customer. So they have paid salaries, and when they get the $100 check paid, that's 3 months out, and then it's 75 rupees to $1. So for the same work, they have essentially improve their margins by 20% just because rupee weakened, right? So that is the impact of inflation and macroeconomics in general. But that's the inflationary part and the currency part. On the other hand, because governments have to control inflation, the textbook example and comes from Keynesian economics, uh, which is to raise interest rates. And why do the governments or basically RBI raise interest rates? Is because it will incentivize people to then park money in banks in risk-free or non-risky assets like fixed deposit instead of taking the risk in market. So by raising rates, they incentivize uh, capital to flow back into the banking system, and especially by using operations, the RBI can take that liquidity away from the market. So, because equity is a stream of cash flows discounted to perpetuity, as the interest rates keep going up, that discounting factor, which is the denominator that is used to divide the numerator of cash flows, the denominator increases, so the ratio decreases, which means like if your cash flow was 100 rupees and the discounting factor was x, x plus delta x becomes the discounting factor, the denominator. So 100 divided by x plus delta x is a smaller number than 100 divided by x, which was the case before. So uh, that leads to compression in PE ratios, which means people are willing to pay less for the same earnings outlook when the interest rate increases in the market, right? So that is why everything is linked, and especially in the case of India, following global and local macroeconomics is an important aspect of pricing equity and risk in Indian markets.
Krishna, you want to go next?
Sure. Am I audible now?
Yeah, loud and clear, man.
Cool. So the last couple of years, the correlations between the currency exchange and things like interest rates and all of that has been a little bit like off. Do you see this trend continuing?
Hi. So yeah, the correlation is something which is not causality, right? So there are two different things. Causality, matlab, ये what is the underlying reason? इसके लिए ऐसा हुआ क्या? Or is that what actually led to one thing led to another? Now, um, when we are looking at things, technical relations like correlation, unfortunately, we have to also look at technical relations like purchasing power parity and these kind of technical economic terms. But long story short, uh, uh, you know, correlations in currencies never work out, right? They are a much longer play. Equity and GDP is more closely linked over a 10-year term, but currency is a 20-25 year play, right? So if you're a fundamental currency investor, then your horizon is 25 years. So that said, that's not really a feasible investment strategy because nobody will give you 25 years time to be right or wrong about your strategy, right? So essentially, then currency still remains like a technical play. And if you think about what is happening with currency, right? So currency is traded in pairs. Matlab, say let's say, man, you buy $100 and you get whatever rupees out of it, right? So uh, but those pairs are a finite number, and it's not more than, let's say, in a case of a country, typically it's not more than 10 different pairs that are traded liquidly versus 5,000 stocks that are traded in India. So when you're trading currencies or when you're trying to predict currencies, the amount of activity of the number of people that reflect pricing perfection in just 10 instruments versus trying to find price anomalies in more instruments. So just to make it another example, try to see if you can outsmart people on the most liquid stock. So let's call it Reliance, right? So can Reliance, if you are a fundamental investor of Reliance, can you outsmart the daily technicals, right? So that's the game when you're playing in currency, and hence how currency affects stocks. But stocks get priced more frequently, so they can be mispriced based on the currency. They can be mispriced based on the inflation expectation. But uh, as they say, everything is linked in finance.
Fair enough. Fair enough. Thank you. So, um, I don't know if it this quite ties in directly to the last question, uh, but there were a couple of studies that showed the implications of the DXY with respect to the Indian market or the Nifty slash Sensex, and it shows a solid inverse correlation. What are your thoughts on the DXY and its implications on the Indian market, whether it be the or Indian either the Nifty 50 index or the Sensex?
Right. So, DXY is again, it's not a single currency pair. So, for people who are new to the term DXY is basically a basket of 7, 8 currencies that are, it's like a currency, right? So it has few underlying currencies that are measured against US dollar. So, it's not purely USD INR, and it is a basket of different currencies and hence represents different economies. Though it's one of the indicators used by a lot of people to measure dollar strength. If you go to external websites, here, dollar index, which hovers between 95 to 85. I think that's also based on the DXY. So, uh, but we are rupee investors, right? So most of the audience in this call, we don't really care about what Brazilian real does to dollar, though we should, because there are exporters like Cupid Pharma, which is the only listed condom manufacturer in India. It has a large South American market. That's the specific case of one company. But if you're talking about the index in general, we are basically really bothered about INR versus USD. So that said, that's a currency pair that does impact. And the governor of RBI, when he comes out with the monetary policy committee meeting notes, that happens, I think, if you are watching press releases, central banks have become very important participants who drive market sentiment. If you notice, in the last 1 week, 10 days, there has been a steep correction of technology stocks in Nasdaq, right? And I will now give you an example of why that steep correction is Nasdaq, and how does that reflect to mid cap and large cap IT names in India, right? Which has also been correcting. So essentially, it is kind of probably not complete to think that Indian markets are isolated from global markets. So what is happening is that the US Fed chairman is saying that I'm going to stop the QE from March. QE meaning quantitative easing, which means free money being pushed into the banking system, while he's not doing it, right? So he's just saying, as of now, I'm going to do it, but he's not done it. And the markets are confused, and they're pricing that if he's saying it, he's probably going to do it. So these technology stocks, right? So they kind of have this elliptical expected earnings where you start off small and then you quickly kind of accelerate your earnings. So most of the earnings is in the future, and if the future interest rates are going up, that means that the numerator is still expected to grow the same way, but the denominator is growing faster, which means the stocks are not that valuable anymore when the interest rates were lower. So that's correcting, and then as interest rates are hiked in US, because US is the global currency, more people will be attracted to earn that extra income by putting money in the US banks, which means that inflation will likely cool in US. If inflation cools, US dollar will kind of become more valuable because inflation erodes purchasing power, which has an impact on Indian exporters because Indian exporters will then get more rupee for the dollar if dollar strengthens, while they pay the same rupee to Indian local labor. But again, if they continue to do that, what will happen is we will import oil at that expensive dollar, and that will be something like a inflation at our end because now oil costs us more per kilometer because the dollar value has increased. So we still buy oil in dollars. So that said, the main challenge is that inflation in India costs us both ways. So while it benefits listed companies by improving their margins at the personal balance sheet level, it might not be great, and therefore the government is concerned in containing inflation.
Cool. So you spoke a little bit about IT being a sector that's affected by currency. Uh, what would you say are the other sectors which are, uh, you know, meaningfully impacted by currency fluctuations?
Yeah, IT is the most exposed because uh, if you think about it, the IT inventory and IT inventory is people, right? So the salaries of people, they are sort of kind of fixed, right? So and the US dollar is their revenue. So unless they hedge the currency, which is what most IT companies tend to do, which they will hedge their currency so that they get a fixed rate predetermined so that they can plan their business well. Uh, that other businesses that are impacted are let's say Bajaj, right? So they export you know uh, auto rickshaws to Sri Lanka, or they export motorcycles to Africa and South Asia. So when they're earning in those currencies, the way those currencies react impacts Bajaj's ability to revenue if they're not fully hedging those currencies. So for example, if they're exporting motorbikes to Indonesia, and Indonesia is, as we know, an oil producing country. So if they might be to US dollar because Indonesian rupiah, as it's called the currency name, actually along with the oil price because they are a major oil exporter, right? So uh, typically in India, you will find most companies will get impacted by currency. It is a misnomer, or it's kind of naivety to think that it's only certain businesses. Apart from like Indian banking system, which is core rupee denominated and rupee driven business, most other businesses, right, which will get whipsawed by currency movements if they have not hedged the currency well. Indian banking system, on the other hand, does have an impact, but it's not as high through the effects. What happens with the case of Indian banking, they get impacted, but they get impacted because Indian banks hold government bonds in their balance sheet, right, as collateral for many things. So as the inflation feeds to the currency, the bond yields react to it, and they get impacted by the bond yields instead of the effects. So, uh, in general, in India, every kind of business does get impacted, especially the listed ones, because the listed businesses are more at the front line of cross-border finance than the unlisted ones or the smaller businesses. So when you're operating in Indian market, knowing about currency and impact of currency and inflation on your equity portfolio is very, very important. And you must take this into account when you're doing your own analysis.
Krishna, you want to go next?
Sure. You spoke about sectors, and I think in the beginning as well, you touched a little bit upon inflation and its impact on the currency fluctuations. Could you just like explain that a little bit with more focus on why is inflation one of the persistent factors that's causing India over long periods of time, or the Indian rupee over long periods of time, to depreciate against the dollar and all other major currencies?
So, think about this. I'll make it a interesting example. Right? Let's say that you are the chief of a tribe, right? Krishna is the chief of a tribe, and I am the chief of a tribe, and we live in two different mountains, right? So, mountain I get sandalwood, and of course, we are talking about a time hundreds from now before. So, cutting sandalwood would not be a crime anymore. So we in my mountain I get sandalwood. In your mountain, you get Sanjeevani booty, right? A medicinal plant, right? So what happens is that your people in your tribe, Krishna, they like sandalwood a lot, and some people in my tribe get sick, so I get Sanjeevani booty from you and try to fix the ailment of my people, right? So what happened is, and we are trading, and therefore let's say we have equally matched supply and demand, and it's in equilibrium. Now suddenly corona hits my mountain, and a lot of people get sick in my mountain, right? So then I go to Krishna and say, like, can you please give me a lot of Sanjeevani booty, because a lot of people are sick in my mountain. And so Krishna says, no, it's not just your tribe. Actually, my tribe is also sick with corona, so I'm first going to kind of take care of my people, and then I'll give a ton of sandalwood for every kg of Sanjeevani booty. I'm willing to give you 5 tons, but I really need it, right? You manage your politics internally as to how you're going to take care of this, but I'm willing to give you 5 tons of sandalwood. So suddenly, my sandalwood has become 20%, of the value of what it used to be, because my demand of something which I don't produce has increased a lot. So this is what it is. So this is inflation, where I am pay 5 times the price for something I used to buy for the same price, which is now costing me 5 times. So think about India, right? So Indian people, as their per capita income increases, more people are buying bikes and cars. Now, India is a net oil importing country, right? So the Indians are going to the oil producing nations like Middle East and Indonesia and saying, like, hey guys, we need a lot of oil, right? People are coming up with cool bikes and cars, and people are making a ton of money working in services sector in India. Can you ship us more cars, and can you ship us more fuel? And then they go like, yeah, sure, but if you're going to burn so much fuel, I mean, do you have more money for me? Because I have other people who also need fuel. So as you can see, what our actions in the domestic country impact inflation, right? So to that extent, I mean, one thing we have to understand is, for a growing economy, inflation is a good thing. It's a bad thing for people who are on the fringes of economy, basically the bottom of the pyramid. They get crushed by inflation the most. But there's also a lot of government support system, like ration, like subsidies, which take care of that to a certain extent. Therefore, I mean, in a social context, it's very important to inform people about the subsidies and the different government schemes that can benefit them. Otherwise, for them, they will never end up saving enough. So, while inflation benefits exporters, so just think about a textile manufacturer that is sending bed sheets to Target and Walmart in US, right? So their labor is local. People who are operating spinning mills in their factory, who are getting paid in Indian rupees, but they are exporting to Walmart and getting paid in dollars, right? So they want that the Indian rupee should depreciate, and they should get more rupees for the same dollar invoice. RBI does not want that, because that will lead to price instability, and a mandate of RBI comes from the power of the government. So the government has appointed RBI as an autonomous body to ensure that inflation is pegged at 4%. So it's this push and pull that creates opportunities in the market, where essentially you are seeing how how this gets priced in. So, you know, what we do in our small case, right? The listed venture capital small case, it's a basket of stocks that have between 1,000 crore to 500 crore market cap. It is, if you think about this universe, there are 2,500 different stocks that uh, that are there in the universe. Abhi, many of you in the audience probably also invest and do analysis of stocks, uh, so that they can appreciate that 2,500 stocks is a large number of stocks to be analyzed uh, uh, manually. So we use non-balance sheet parameters like the quality of board as a way to screen stocks and construct portfolios that are neutral to broad economy, and this is a very robust and risk-adjusted return versus something like a fundamental selection where you're using balance sheet parameters.
Abhishek, one last quick, a little unrelated to the last topic. One quick question. So, how does a hawkish environment abroad, like say in the States, affect India? For example, like how it changes the FII thought process and um, other factors that affect India.
So hawkish, like the term is comes. It's again why understanding how finance is artificially made difficult. Hawkish and dovish. These are terms that are used in the context of central banks. Dovish means that uh, the central bank is saying that they will do more monetary easing, or which is printing of currency. And hawkish means that they will withdraw liquidity from the market, right? So ये किसी को पता नहीं कि डव ने कब लिक्विडिटी मार्केट को दिया और हॉक ने कब लिक्विडिटी लिया. So I don't know where these terms actually come from, but it's funny. I mean, these are actually technically used terms. Hawkish here means that the New York Fed is saying कि मैं तो भाई अब काफी पैसे मैंने markets को दे दिए. Now I just want to kind of withdraw some money because I think it's overheating, right? And the political system is kind of saying नहीं 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 अभी हम लोग का we have not stabilized the economy because corona आ गया, ये हो गया, वो हो गया, अभी चलने दो. So but central bank is independent from. But in the case of US, for example, I mean, you'll be surprised to know, like in RBI is an autonomous body which is independent from the government, self-regulating body, which means they are actually people from the banks of US who have formed a small. So there's no autonomy. It's not an autonomous statutory body like how it is done in India. So अभी हॉकिश का मतलब क्या है? हॉकिश का मतलब है कि यूएस बोल रहा है कि थिंग्स आर ओवरहीटिंग इन माय कंट्री, तो मैं तो इंटरेस्ट रेट रेज कर रहा हूँ. अभी आप को इसका बेनिफिट लेना है तो आप buy my government bonds and you sit आराम से because we will never default on that money. So you're done with your investing. खत्म. So that impacts because if suddenly US is willing to pay more, is willing to kind of pay more interest to attract money, we should also then match up, right? मतलब पड़ोसी ने ये कर लिया तो हम लोग को भी we have to kind of match up, right? So definitely that will impact our ability to attract money at lower interest rate, which means cost of capital will go up in India. So as cost of capital goes up, it will be negative for businesses. So they have to maintain their profit margin. So coming back to the short answer, when Fed is hawkish, profit margins of Indian businesses becomes like a key indicator going forward.
Thank you, Abhishek. It's been really informative. I think you've answered a lot and given a lot of perspective about how currencies impact the markets. Um, as of now, we don't have any questions from the audience. So we'll be wrapping up the space right now. Thank you so much for
Okay.
coming and spending your time with us, sharing your knowledge and your perspective. And yeah, we look forward to to having you again. Sai,
Thank you.
any closing words?
Thanks, Abhishek. Thank you for the informative session. Guys, whoever's interested in Abhishek's small case, check out his Twitter page and I guess maybe DM him. He could provide you with more information. But thank you so much, Abhishek, for a, a great session. So, till next time.
Thank you, guys. I mean, it is nice to talk about this, and I hope it's a complex and a big topic, and not sure if I was able to cover the more important points, but it's definitely something we should kind of bake in into our investment thesis. But thanks, and have a nice evening.